Welcome to CryptoCryptid. Today we're going to look at crypto crashing, and if you want to know more about crypto, make sure you follow our channel. Let's get into the video. Speculative investors may have been pushing meme stocks to the moon earlier this week, but their crypto counterparts have been coming back down to earth en masse. Hedging activity is on the rise and bullish bets are finding limited demand, even with Bitcoin still almost 40% below its peak. These are rare times of restraint among day traders, who until last month's $500 billion crash were famously in the throes of bullish mania. Bitcoin sold off sharply on Wednesday. The slump represented an acceleration of a downtrend in the world's #1 crypto that had begun over the past 10 days or so. Investors and industry specialists told MarketWatch. At last check, Bitcoin prices were changing hands at $38,732 on CoinDesk, which is actually a remarkable feat since it touched a session low of $30,201 before bouncing back. Prices of Ether on the Ethereum blockchain were off 22% at $2,608 after touching an intraday nadir at $1,902, and Dogecoin was off 25%, changing hands at 35.8 cents. When Bitcoin sneezes, the rest of the crypto complex catches a cold because the dominant digital asset has increasingly become a gauge of sentiment, not just in non-conventional markets, but as a measure of risk appetite more broadly. Crypto markets have shaved more than $850 billion from their combined market value. The price of Bitcoin dropped off a cliff after Elon Musk announced that his electric car company Tesla would no longer be accepting cryptocurrency payments. He expressed concerns in a tweet on May 13th that cryptocurrency was coming at a cost to the environment. Central banks and governments around the world are also becoming increasingly concerned about crypto's risk to the environment, financial stability, and individual investors' wallets. The picture has worsened for digital currencies after some banks blocked payments to crypto exchanges. Starling Bank has temporarily stopped its customers from transferring money to the cryptocurrency exchanges because of concerns about criminal activity. It said, "We have temporarily suspended outbound faster payments to cryptocurrency exchanges to protect customers, having observed high levels of suspected financial crime with payments to some cryptocurrency exchanges. This is not just an issue for Starling, but for all banks. The suspension will lift on June 23rd. People can still use their Starling debit card to make payments." The financial regulator has also warned that a significantly high number of cryptocurrency businesses are not meeting the required standards under the money laundering regulations. This means some could be forced to close. Calls for further regulation are seen as a threat to the decentralization of crypto, which is impacting on price. In mid-May, China suspended operations of major cryptocurrency mining players, with the likes of Ethereum, Dogecoin, and Binance Coin also falling sharply in value. Already, the ban on Chinese banks and payment firms from providing crypto transaction services had been a major setback for Bitcoin's use case, says Susanna Streeter, senior investment and market analyst, Hargreaves Lansdowne. You only lose money if you decide to sell Bitcoin for less than you bought it, for which is known as crystallizing your losses. If you leave your money invested when the price of Bitcoin is low, you aren't technically losing any money. Some investors panic when prices crash and decide to sell, but it's usually better to leave your money invested in the hope that prices rise again. It is impossible to tell. The most likely reason for Bitcoin to rise again is if mining and servicing the cryptocurrency becomes environmentally friendly. The crackdown in China and the calls for greater regulation across the globe could impact on the decentralization of crypto, one of its biggest attractions to users and investors. Given its volatile nature, it is possible that Bitcoin will gather momentum again at some point in the future. Though, remember, if it rises too quickly, it could just fall as rapidly. This is because Bitcoin's price is based solely on speculation. In other words, it's a gamble, so don't invest all your hard-earned savings in cryptocurrency. You should make sure you understand why you are investing in something in the first place. Many people have been tempted to invest in Bitcoin for the wrong reason, because they have a fear of missing out. They therefore risk buying Bitcoin, which is really expensive, making the potential for loss a lot greater. Rick Ealing from Wealth Manager Quilter outlines 6 questions you should ask yourself before investing in Bitcoin. 1. If I buy now, isn't it more expensive than it was just a few months ago? 2. Why am I wanting to buy a thing because its price is higher? In what other area of life do I do that? 3. Is there any evidence to suggest prices could rise higher than they are now? 4. If I believe that I will buy it now and then sell it for even more later, who do I think will buy from me for the higher price and why? 5. If this asset is so great, why was I not looking at it when it was much cheaper? 6. Have I convinced myself that I'm in some way in the know? If you don't have answers to these questions, it's probably not a good idea to invest. If you do buy Bitcoin, make sure you aren't putting money you need on the line. When assets rise very quickly in price, it typically makes a crash, or at the very least, a correction, much more likely. That is the situation Bitcoin is in right now. Bitcoin was in a bull market, meaning it is going up in value. Bear markets go down, some in a flash crash. It took the cryptocurrency 11 years from launch to get to $20,000 per coin, but only 3 weeks for Bitcoin's price to double from there. Here's a beginner's guide to investing. Its recent rise has been stratospheric. Bitcoin soared more than 700% in 12 months, and a single Bitcoin has been priced at an all-time high of $63,000. However, is cryptocurrency a reliable long-term investment? Don't call it a crash. Bitcoin is falling, but it's an asset known for volatile periods. Its current slump isn't pegged to one single event or piece of news, but was instead being blamed on fear, uncertainty, and doubt in the parlance of crypto traders. Fear, at least partly, centered on China's digital asset policy. The People's Republic was reportedly cracking down on the use of digital assets. For veteran crypto investors, such reports aren't new. Meanwhile, bearish tweets from crypto enthusiast Elon Musk were also credited with tanking the crypto complex. Musk said earlier this month that he would no longer allow Bitcoin to be used for payment at electric vehicle maker Tesla until the crypto becomes more environmentally friendly. Musk had been one of the key reasons that crypto broadly had been on an uptrend, with his tweet on meme coin Dogecoin and Bitcoin supporting an uptrend in those assets. Separately, analysts at JP Morgan Chase, including Nikolaos Panirgitsoglu, make the case that investors in Bitcoin were shifting to gold futures, which coincidentally has been seeing steady climbs in recent trade. Institutional investors appear to be shifting away from Bitcoin and back into a traditional gold, they wrote. Market participants told MarketWatch that Wednesday's losses were also being amplified by the use of leverage, which was forcing margin calls at some crypto trading platforms. Bitcoin and crypto are inherently volatile. Bespoke Investment Group says that the average drawdown from a record high is close to 50%, and on 69% of all trading days over the past decade, Bitcoin has been down more than 40% from its record high. That said, bullish investors are advocating that long-term investors stay the course or review their original investment thesis before dumping crypto holdings. Over the course of the past 11 years, Bitcoin has seen more than 750 instances where prices saw a daily change of 5% or greater, more than 230 instances in which it swung by at least 10%, and nearly 50 times that it has moved by at least 20%, according to Dow Jones market data. The crypto crash appeared to come out of nowhere, but there were a few factors that led up to it. For one, Tesla CEO Elon Musk announced that the company was suspending its acceptance of Bitcoin as a form of payment due to concerns over its impact on the environment. In order for Bitcoin to succeed over the long term, it needs widespread adoption from merchants. When Tesla announced earlier this year that it would start accepting Bitcoin, crypto supporters were excited that this may mean other companies would follow suit. Now that Tesla has backtracked, many investors are concerned that Bitcoin will have a harder time gaining acceptance, especially considering Musk has been one of Bitcoin's most prominent supporters. Around the same time as Tesla's announcement, China began cracking down on cryptocurrency as well. While China has discouraged crypto for years, it recently revealed that it was imposing heftier penalties for Bitcoin mining, the process of creating new Bitcoin tokens. Bitcoin mining has long been concentrated in China, and the country's crackdown could affect the global crypto market. While the current crypto crash may be unsettling, it's nothing that cryptocurrencies haven't experienced before. Crypto has always been subject to extreme volatility, so this is not necessarily a new phenomenon. In fact, even the biggest names in crypto, Bitcoin and Ethereum, have taken tumbles much worse than the current downturn. The price of Bitcoin has plummeted by roughly 80% in the past, and Ethereum once lost more than 90% of its value over the course of a year. Cryptocurrency is one of the most volatile types of investments out there, so plunges like these shouldn't be too surprising. Many experts also believe crypto has been overvalued, so it was only a matter of time before the bubble burst. Despite their dramatic downturns, the major cryptocurrencies have consistently recovered from their slumps. Both Bitcoin and Ethereum went on to see their prices increase exponentially after losing 80% and 90% of their value respectively. Even considering the current downturn, Bitcoin's price is still up more than 300% over the past year, and Ethereum is up by a staggering 1,150% in the same time period. That said, there are no guarantees that a cryptocurrency will always recover from its crash. Crypto is still a highly speculative investment, and it may or may not succeed over time. So if you're thinking about investing, keep in mind that there's always a chance that someday crypto won't be able to bounce back. Cryptocurrency is a high-risk investment, and it's proven yet again that it's no stranger to volatility. If you're considering buying, right now may be a good opportunity because prices are lower. Just be sure you know what you're getting into, because while crypto can be lucrative, it's not the right investment for everyone. That's all for today, and if you find the video helpful, please like, comment, and subscribe to our YouTube channel. Stay tuned for more cryptocurrency related news, and I'll see you in the next video.